Welcome back to Explain the Charts, everyone. Today, September 12th, 2025, we're diving deep into one of the market's most captivating stocks, Tesla, ticker Tesla. The market is buzzing, and so are the charts, with Tesla currently trading around $394.22, significantly up from yesterday's close. This impressive surge follows a wave of positive news, primarily driven by growing investor confidence in impending Federal Reserve rate cuts and strategic business developments. Let's first unpack the latest headlines and then seamlessly integrate them into our technical chart analysis to understand the full picture. Recent reports from The Motley Fool and Finviz highlight that investor optimism for rate cuts stems from a weakening job market, despite the August Consumer Price Index being hotter than expected. The Labor Department's report of the highest initial unemployment claims since October 2021 is notably swaying market sentiment. This suggests the Federal Reserve may prioritize maintaining high employment over strictly targeting inflation, signaling potential rate reductions at their upcoming meeting. Such an environment typically provides a significant boost to growth stocks, often categorized as riskier assets like Tesla, making them more attractive to investors. However, the story isn't just about macroeconomic factors. Investors Business Daily emphasizes that Tesla's recent breakout is not about EVs alone. Instead, a significant portion of the market's enthusiasm is shifting towards Elon Musk's ambitious strategic bets on artificial intelligence, energy storage, and robotics. The recent unveiling of the Megablock product, an industrial energy storage solution featuring enhanced installation speed and lower construction costs, has clearly excited the market. Musk's pronouncements on Tesla's very powerful next-generation AI chip, AI-5, and the long-term potential of the Optimus humanoid robot are also contributing to this renewed bullish sentiment, promising diversified future revenue streams. Looking at the daily chart, we can see Tesla closed yesterday, September 11th, at $368.81. This represents a significant 5.32% gain, confirming a decisive breakout past the traditional consolidation buy point of $367.71, as highlighted by Investors Business Daily. This clear move above a key technical level signals strong short-term bullish momentum and often attracts further buying interest. If we zoom out to the broader daily time frame, going back to late 2024, we observe a powerful rally that began around the $240 levels in November, propelling Tesla to a 52-week high of $488.54 by mid-December. This period was characterized by immense bullish momentum and high trading volumes, reflecting strong investor confidence. The stock demonstrated its ability to make parabolic moves when sentiment is overwhelmingly positive. However, this impressive run was followed by a sharp correction into early 2025, bringing the price down to the $220 range by March. This significant reversal likely reflects the extremely pricey valuation concerns and falling global EV delivery numbers that Analytics Insight pointed out, underscoring the stock's sensitivity to fundamental headwinds. Notably, Tesla found strong support around the $212 to $220 level, which also aligns with its 52-week low. This zone has proven to be a critical base for the stock, suggesting a significant demand area where buyers step in. Shifting our focus to the one-hour chart, let's examine the price action from late August to early September to understand the intraday volatility leading up to the recent breakout. We can observe how the price consolidated around the $340 to $350 range, showing signs of indecision. The sharp dip on September 2nd, dropping from $333 to $327 within a few hours, highlights how quickly sentiment can shift and liquidity can be tested on shorter timeframes. These short-term fluctuations are crucial for day traders looking for entry and exit points. Now, let's narrow down to the 15-minute chart, specifically focusing on the recent bullish breakout on September 11th, which the news highlighted as a pivotal moment. Starting from the early trading hours of September 11th, we see the price consolidate tightly around $350, building energy. Then, a powerful upward momentum began around 13:08 Universal Time Coordinated, characterized by strong green candles and increasing volume, pushing the stock from approximately $350 to nearly $370 by the end of the trading day. This rapid ascent with significant volume clearly demonstrates strong buy-side pressure and confirms the aggressive entry that Investors Business Daily noted, signaling a definitive shift in short-term sentiment. Such a breakout with conviction is a classic bullish indicator for traders. Despite this impressive run, Analytics Insight and the Motley Fool unequivocally warned that Tesla remains extremely pricey, with forward price-to-earnings (PE) ratios well over 130 and even trailing PE near 220. This high valuation places significant expectations on future growth and makes the stock particularly susceptible to sharp corrections. This caution is reinforced by the noted decline in global EV deliveries for the first half of 2025, which directly impacts Tesla's core business margins. The average analyst price target of $301.93, significantly below current trading levels, further underscores this cautious fundamental outlook. So, when deciding when and at what price to trade, what are the key levels to watch? For immediate support, the broken resistance around $367.71 should now act as a crucial psychological and technical floor, ideally holding any minor pullbacks. Below that, we identify stronger support zones around $350, a level that has seen both resistance and support in recent months, and then the more significant $320 to $325 area. A break below these levels could signal a short-term bearish reversal, indicating weakness in the current upward trend. On the upside, the current price in pre-market or early trading today, around $391.50, needs to be maintained to sustain the momentum. The next significant resistance is likely at the psychological $400 mark, a round number that often presents a challenge to bulls. Beyond that, traders will be looking at previous highs closer to $420, then $460, and ultimately the all-time high of $488.54. Clearing these levels would indicate strong sustained buying pressure and could trigger further parabolic moves, as seen in late 2024. In the short term, a bullish scenario could see Tesla continue its upward momentum, potentially reaching the $400 to $420 range. This outcome is moderately to highly likely if the market continues to price in Fed rate cuts and if positive sentiment around Tesla's AI and energy initiatives persists. We need to see sustained high volume on green candles, particularly if it breaks above $400 convincingly, to reinforce this bullish outlook, with targets possibly extending towards $420 and $460. Conversely, a bearish reversal is moderately likely, especially given the stretched valuation and past volatility, if the stock fails to hold the $367.71 or $350 support levels. Disappointing Q3 delivery figures or any unexpected hawkish signals from the Fed could trigger such a pullback, potentially bringing it down to the $320 to $300 range, closer to conservative analyst targets. A breakdown below $350 with high selling volume would be a strong bearish confirmation. For long-term investors, the focus remains on Tesla's ability to successfully diversify revenue streams beyond its core EV business, particularly with its energy storage and AI ventures. Successful execution of the Megablock and Optimus projects, alongside continued advancements in the AI-5 chip, could provide substantial future growth, justifying its high valuation over time. However, persistent declines in EV sales and margins, combined with intensifying competition from other automakers, pose significant long-term risks that cannot be ignored. The upcoming Q3 global vehicle delivery numbers in early October and the Q3 earnings report on October 21st will be crucial catalysts for future price movements. Additionally, the shareholder vote on Elon Musk's ambitious compensation plan in November will also be a key event to monitor. These events will provide clearer direction on whether Tesla can sustain this recent bullish momentum and truly justify its ambitious market valuation going forward. Thank you for joining Explain the Charts for this in-depth analysis of Tesla. Don't forget to like, subscribe, and hit that notification bell for more market insights.